Imagine a world where your money works for you while you sleep, generating consistent income without you lifting a finger. That's the power of dividend stocks. We're about to dive into the fascinating realm of these stocks, exploring my top 3 picks that promise a steady income stream for life. But that's not all. There's an exclusive tip waiting for you at the end that could potentially revolutionize your investment strategy. Stay tuned as we unravel the magic of the 3 dividend stocks that I'll hold onto forever. Hello viewers, if you are enjoying this content, and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us and remember to comment and share. So, what makes dividend stocks so special, and why are they considered a smart investment? Well, let's start by unraveling the veil of complexity around dividend stocks. Imagine owning a share of a company that regularly rewards you with a portion of its earnings. Just for being a shareholder. That's essentially what a dividend stock is. One of the primary benefits of dividend stocks is the prospect of regular income. This makes them particularly attractive to investors who are looking to supplement their income or those who are nearing retirement and want a steady stream of cash flow. Think of it this way, if you owned a fruit tree, not only would you enjoy the shade it provides, but also relish the fruits it bears season after season. That's a dividend stock for you. The company is the tree, the dividends are the fruits, and you, the investor, get to enjoy both. Now let's talk about the power of compounding. When you reinvest the dividends you earn back into buying more shares of the company, you're essentially multiplying your income potential without investing additional funds. It's like planting the seeds of the fruits you harvest, growing more trees, and thus reaping more fruits over time. Finally, dividend stocks often come with lower risk. Companies that consistently pay dividends are usually financially stable and have a proven track record of profitability. They're typically less volatile in turbulent market conditions, offering a cushion of sorts during economic downturns. To illustrate, let's consider a fictional company, Fruitful Inc. They've been paying consistent dividends for the past 20 years. Even during a market downturn, while the stock price may fluctuate, the dividends provide a steady income, reducing the overall risk for investors. So, in essence, dividend stocks offer the beauty of regular income, the magic of compounding, and the safety net of lower risk. They're a way to own a piece of a company and get paid for it over and over again. Now that we've seen the power of dividend stocks, let's delve into my top 3 choices. Kicking off our list is a company that calls itself the monthly dividend company, Realty Income. Now, when a company gives itself a nickname like that, you know they mean business. And in Realty Income's case, that business is real estate. Realty Income is a real estate investment trust, or REIT, that owns and leases over 6,000 commercial properties across 49 states in the US and Puerto Rico. Their tenants range from convenience stores and drugstores to gyms and movie theaters, a diverse portfolio that helps keep the business steady. But let's cut to the chase. What makes Realty Income a top-notch dividend stock? Well, it's all in the nickname. Since its inception in 1969, Realty Income has been faithfully paying out dividends every single month. That's right, every month. Not yearly, not quarterly, but monthly. And the amount isn't a pittance either. Over the past decade, the company has increased its dividend by an average of 4.5% per year. That's a track record few can boast of. But don't just take the numbers for it. The key to Realty Income's success lies in its business model. By focusing on commercial properties with long-term net lease agreements, Realty Income ensures a steady stream of rental income. These leases typically require the tenant to cover costs like taxes, maintenance, and insurance, further reducing Realty Income's expenses. This stable, predictable cash flow is what allows Realty Income to maintain its monthly dividend payments. So, why is Realty Income a good long-term investment? The answer is simple. With its robust business model, consistent dividend track record, and a diverse portfolio of properties, Realty Income offers a great balance of income and growth. Investing in Realty Income is like having a reliable tenant who always pays rent on time and occasionally gives you a bonus. So, that's our first pick, a real estate giant that provides a steady monthly income. The second stock on our list is a key player in the digital revolution, Digital Realty Trust. Often referred to simply as DLR, this real estate investment trust, or REIT, is a force to be reckoned with in the world of data center properties. DLR operates on a global scale, with over 200 data centers across 4 continents. These facilities house the essential hardware that powers our increasingly digital world. From cloud services to artificial intelligence, DLR properties are at the heart of the technology we use every day. But it's not just DLR's scope that's impressive. The company's financials are equally remarkable. DLR has consistently increased its dividends for 15 consecutive years, making it a member of the prestigious Dividend Achievers Index. The company's dividend yield currently stands at around 3%, a competitive figure in today's low-interest rate environment. But what makes DLR a top choice for a long-term holding? Well, the answer lies in the intersection of two trends. First, the ongoing digital transformation. As businesses and consumers continue to embrace digital services, the demand for data center space is expected to grow. Second, the increasing prominence of REITs. As interest rates remain low, investors are turning to dividend-paying stocks like REITs for income. DLR stands at the crossroads of these trends. It stands to benefit from the growing demand for data centers, while also offering a steady income stream in the form of dividends. This dual advantage makes DLR a promising investment for the future. However, like any investment, DLR isn't without its risks. The company faces competition from other data center REITs and must continually invest in its properties to keep them up to date. But with its global footprint and strong track record, DLR is well positioned to navigate these challenges. In summary, Digital Realty Trust offers an intriguing mix of growth and income potential. It's a tech-savvy real estate investment that's riding the wave of digital transformation. And with its strong dividend track record, DLR is a stock that income-focused investors should seriously consider. DLR, a tech-savvy real estate investment with a strong dividend track record. Last but definitely not least, we have Prologis, the world's leader in logistics real estate. Prologis is a titan of the logistics real estate sector, with a global footprint that's hard to ignore. With a presence in 18 countries, its expansive portfolio spans over 950 million square feet of space. That's right, from the Americas to Europe and Asia, Prologis is a name synonymous with high-quality distribution facilities. But why is this important, you might ask? Well, in the age of e-commerce and just-in-time delivery, logistics real estate has become a key player in the global supply chain. And Prologis, with its strategic locations near key transport hubs, is perfectly positioned to capitalize on this trend. What's more, Prologis doesn't just settle for any market. Oh no, it specifically targets high-growth, high-barrier markets. This means it focuses on areas where demand is high, but supply is constrained. This strategy has helped Prologis maintain high occupancy rates and strong rental growth, which in turn translates into stable, reliable income for its shareholders. Speaking of shareholders, let's talk dividends. Prologis has a stellar record of not only paying, but also growing its dividends. Over the past decade, the company's dividend per share has seen an average annual growth rate of more than 7%. That's a performance that would make any income investor smile. But it's not just about the dividends. Prologis has also delivered impressive total returns, outperforming the S&P 500 over the past 5, 10, and 15-year periods. This combination of income and growth is what makes Prologis a compelling pick for any long-term investor. In conclusion, Prologis is more than just a real estate company. It's a global powerhouse in the logistics sector with a strategic focus on high-growth markets and a strong commitment to delivering shareholder value. Whether you're looking for dividend income, capital appreciation, or both, Prologis has a lot to offer. PLD, a global powerhouse providing a solid dividend income. So, there you have it. My top 3 dividend stocks that are worth holding on to forever: Realty Income, Digital Realty Trust, and Prologis. These companies not only offer attractive dividends, but they also have strong business models that can withstand market ups and downs. Remember, the goal isn't to chase the highest yield, but to look for sustainable dividends from solid companies. Now, for the special tip I promised. When it comes to dividend investing, always consider the dividend payout ratio. This is the percentage of a company's earnings paid out as dividends. A lower ratio suggests that the company has room to increase its dividends in the future. This is a simple yet powerful tool that can help you make informed decisions. But as always, don't just take my word for it. Do your own research. Look into the company's financials, consider their long-term growth prospects, and assess their competitive position. Investing is not a sprint, it's a marathon. It's about making deliberate, well-thought-out decisions that will pay off in the long run. Remember, the key to successful investing is patience and consistency. If you enjoyed this video, don't forget to subscribe, like, and share. This helps me create more content like this and helps you stay up to date with the latest investment trends. Until next time, happy investing.